Stock which fell very hard yesterday was DLF. It was down more than 6% on a report from investment bank Veritas, which alleged that DLF had cooked its books for the last 4 years, and there was a huge amount of financial misreporting. Neeraj Monga, author of that report, joins in now to talk about it. Neeraj, good morning. You say in your report that DLF inflated sales by 11,000 crores and profits by 7,000 crores plus since 2007. That's a serious allegation. How do you substantiate it?
Well, it is our contention that the sales that were booked to DLF Assets Limited never had the cash flow or the wherewithal to pay for those sales. And it is very clear that when outstandings to DAL became questionable, DLF ended up merging DAL into itself through DCC-DL Carafe merger. In that process, DLF took on approximately 5,357 crores worth of rupees of debt and issued 1,597 crore worth of preferred shares to promoters or management of the company. That suggests clearly that these sales were unsubstantiated or unsustainable. And so all the profits we believe that were booked on these sales ultimately ended up being funded by the debt which accrued on DLF's balance sheet. It's as simple as that.
Neeraj, morning. You also go on to say that you see DLF having zero execution capability, and you doubt both the asset base and the book value of the company. Why is it that you suspect what may happen in terms of future capability, and what do you think should be the real or accurate book value for this company now?
To the extent we believe that profits booked to DAL are illusory, then approximately 7,000 crores rupees worth of profits were booked on those transactions to DAL. So profit before tax was inflated by that number, which was about 7,233 crores. So if you were to adjust that in the book value of the company, the book value should decline by the same amount. That's our belief. Now, people may agree or disagree with that, but that's exactly what has happened over a period of time. Now, in terms of execution capability of current management, I guess it is a very well-known fact that every business plan that has been laid out by management of DLF, they have been unable to meet those guidelines. They have discussed about expanding into the hotels business. Now they are retracting from the hotels business. They have talked about asset divestitures for a long period of time. None of them seem to be fructifying. In the IPO prospectus, SEZ operations and the rents associated with the SEZ operations were supposed to be core operations of the business. Right now, all of those assets are up for divestiture, and they have somehow become non-core. What is not clear is what exactly is the core operation of this company and what is a non-core operation. At the time of the IPO prospectus, DLF entered into a JV with Lango Rourke for construction. Later on, sometimes 2 or 3 years down after the IPO, that JV was wound up, and management said that they were going to bring out the entire execution capabilities on the operational side in-house. That should give them better control. But then, recently they have said they're going to outsource construction to Shapoorji Pallonji and Larsen & Toubro because they are a developer, not a construction company. It's very difficult to pin where the execution capabilities of this management team lie and exactly what are they trying to deliver to the marketplace.
Okay, Neeraj, we'll leave it there. Thanks for joining in this morning. That is a very concerning report that came through yesterday on DLF. The stock, of course, was under quite a bit of pressure, finally closing down about 5.5%. But the